Can elevated crude prices and a changing Fed narrative push the Canadian dollar higher? Now, after putting in an 11-month high against the US dollar in mid-July, the Canadian dollar has lost over 3.5% of its value. The primary driver of the move appears to be a changing narrative surrounding the US economy that drove the US dollar up against all currencies in the dollar index. But the Canadian dollar's move lower was relatively calm, particularly when compared with other currencies that are commonly associated with commodity prices, like the Aussie dollar, which was down over 6% in the same time period. The Aussie dollar's relative weakness seemed to be related to weakness in China, and the Loonie's relative strength against non-dollar currencies seems to be related to increase in oil prices, which are up almost 10% in the same time frame. Now, in recent days, there's been a noticeable change in the Canadian dollar's direction that could be based on an evolving domestic story. Now, on August 29th, data showed a significant decline in job openings via the JOLTS number and in consumer confidence. And then on August 30th, U.S. GDP came in lower than expected. This pushed the dollar lower and fueled a 0.72% rally in the Loonie. Now, CME Group offers three different size currency contracts, the standard, the mini, and the micro, in order to match a trader up with their preferred risk tolerance. We're going to be using the micros for these examples. If a trader believes the Canadian dollar could rally against the U.S. dollar, they could express that by buying the September micro Canadian dollar futures contract at 0.7394 and targeting a move to the July congestion area of 0.7600. A stop for this trade could be placed below at 0.7274. Now, this trade could make $206 if the target is reached and risks $120 if you're stopped out of your level. Now, if a trader believes the Canadian dollar could go lower from here, they could sell that September CME micro Canadian dollar futures contract at 0.7394 and target a move back to the March lows of 0.7224. A stop for this trade could be placed above at 0.7500. Now, this trade could make $170 if the target is reached and risks $106 if you're stopped out of your level.